Okay, the debate is whether or not you choose your market first or your strategy first. In my opinion, you choose your market first.
Don't act all fucking... What are you doing?
This is just normal how I
No,
talk.
it ain't.
Yes, 100%
No, it's not. Okay, go.
I personally would choose my market first. Why? Because I like fundamentals of certain markets for different reasons. Like, let's say Washington, D.C. 10 years ago. I think Amazon announced that they were making that their headquarters. If I would have seen that and I was investing in the U.S., I'd have been like, okay, I'm going to freaking invest in Washington, D.C. So I'm going to choose the market first based on the fundamental drivers. Then I'm going to go to that market and then I'm going to see what opportunities are available. And then I'm going to adapt a strategy to that market. So I want to choose the market first. Now, that's not the only way. Like, I don't know. Would you choose?
I agree. Okay, so this is where I'm being devil's advocate here. I agree with you, but what happens if somebody was like, okay, well, I want to choose this specific market because I don't want to fucking invest long-term, and that's totally fine. We recommend investing long-term, and we recommend holding real estate forever to build wealth and all that shit. But what if somebody was like, hey, I want to fucking do burrs and I want to do flips and all that shit? It may not work there. So that's why I think yesterday we're talking about like the burr strategy. Let's use that as a prime example because we were just talking about it. What happens if the guy's got a fucking construction crew and that's all he wants to do?
Yep.
It's a viable option.
True.
I think your method works predominantly for markets where people want to go buy and hold long-term, build wealth. That's what I think is the best option. That's why I think
if you choose the right market at an early enough phase, you can do burrs, right? Like you can, you're picking the market that's about to bud. It's about to explode. It just hasn't exploded yet, or the rest of the world doesn't know about this yet. In general, only you're early to it.
I think there's a lot of barriers for people that if they pick the market first versus picking the strategy. I think they have to. I think they have to be open to multiple strategies, but I think you have to be, willing to like you for example. What happens if somebody like? Let me paint you this picture. You just brought up Toronto. Toronto's not an option for young people that don't have a lot of money. Okay, it's too expensive to get in.
Not just Toronto, the GTA.
Yeah, whatever.
The whole
right?
GTA.
Yeah, sure. Yeah. So what happens if that guy doesn't have enough money, or what happens if he actually wants to buy and hold, but he'll never do it anywhere else? He's got the fucking deer in headlight thing. He's not comfortable. He's not comfortable investing outside of Toronto because it's his own backyard, the GTA or whatever. What happens if he just, if he's told he can't do it, and then down the road he just never does it? I think choosing the market. I do agree with you. Like I absolutely do agree.
Sound like it?
No. Listen, but I do actually agree with you that picking the market is probably the best and easiest path to make sure you find success in real estate investing. Or in your real estate business. I don't like the word real estate investing. Or the term. But what I think a lot of people, I think newbies should pick the strategy that they're the most comfortable with.
And then find a market
find the market that suits that strategy.
Okay, so if you're in Toronto and you watch all these YouTube videos, whatever, and you say, hey, the burr seems like a really good strategy, I'm going to go find a market that I can do. I
do not think that you should rely on YouTube to fucking figure out what the best strategy is, okay? Because some fucking jackoff on YouTube is not going to be able to tell you what you're good at. That's the problem.
True.
Okay,
That's
if
true.
you're very good at construction, a burr might work for you in the GTA because you don't have to fucking hire a crew. You could do it. Yeah. So you're gonna make back the money that you would have to pay a GC. That's what I'm trying to say. Yeah. The burr might be a strategy for you, or a flip might be the strategy for you, depending on your skill set.
True.
Right? Well, and maybe the fucking 22-year-old does have fucking money. I don't know.
A lot of them do.
Right? Maybe Buddy does. I don't know. That's why I think picking the strategy is I think it goes both ways. I think you can accomplish it.
Here's
both
why
ways.
I think
I'm picking the market. I'm not picking the strategy.
Same.
Yeah, but we're different levels here. Like we're not talking about like Johnny Newbie.
But like I think they're both viable.
Yeah.
You can do both. I think picking the market is better because if you don't understand your market and you don't really know what the hell you're doing or why you're doing it. Like let's say I go do a burr in some dead city, like let's say Calgary, Alberta, for instance, or whatever. There's more supply than there is demand there.
Well, I don't think picking a strategy and not understanding the market is even an option.
That's why I think this is why I want to talk about it more. That's why I think picking the market first is more important than the strategy.
The market, yeah.
Like because if you're not just picking a market, you're diving into the fundamentals of it. You're diving into what's actually going on here. What's the trajectory? What's happening here? Okay, am I early? Am I in the middle of the game or am I late? Like what's what's driving this market? Why am I investing here? Like I said, you can go buy a stock that pays you a 5% dividend, but the stock price won't move for 20 years. And yeah, you're getting your 5% dividend check, but you're missing out on the appreciation. You're missing out on the other side.
Okay, so I'll play devil's advocate on here. Okay, so I did the exact same fucking thing in Windsor when it was in the shit. Okay. The burrs worked
100%.
in the shittiest market. Yeah. It still worked.
So let me touch on that.
That's what I'm trying to say.
But for a decade, your prices didn't move
100%.
So now I don't know if you foresaw some gains in Windsor's market. You said, "Hey, it can't get any worse." 100%, and you were right. But we didn't anticipate what's happening now necessarily, right?
No, of course, yeah.
Now, what if
all I knew is eventually,
right?
I'm paying like. Listen, this was my mentality. At the fucking very least, if shit doesn't increase at all, at the fucking very least, I'm getting cash flow. I built in some equity. I forced appreciation, and I'm also paying down debt. Done.
100%.
Like at the very worst, and it got me so much experience. Investing, I don't like it. It got me so much experience, like business experience with regards to real estate that I now because I did it in the shittiest possible market in the shittiest town at the time. Now I feel comfortable to go wherever.
Certainly not knocking that. You outperformed probably almost everybody in that time period.
You hear that, Grant Cardone?
End of story.
You hear that?
But here's my point. What if during that time, what if there was a different market where it was just about to explode, right? Because like everywhere east of Windsor has already exploded over the past decade. So what if during that time, instead of having a dead market, you were investing in these other areas like Kitchener-Waterloo that were just budding and just starting to explode because of tech and all these other market drivers that Windsor had no market drivers. So in a way, you were early. Now it paid off 100%, but like, what if Windsor never came back, right? What if you're in Calgary right now? What if Calgary never comes back because the government just keeps taxing oil?
I agree. So I have a lot of mixed thoughts about that. So I talk to Marco all the time, obviously, like big fucking real estate guy.
Yeah.
He always brings up the fact that if he would have done what he did in the GTA, he would have been worth fucking $250 million if he would have started up there. And I agree with that to some extent. But for me, I wouldn't have been able to scale. I wouldn't have been able to figure out, maybe I could have, because the appreciation would have allowed me to scale faster. You know, so it's hard to say, number one. But I did gain a lot of experience owning a lot of doors early on in preparation for what's happening right now.
And another thing too,
it kind of awarded me, you know, I gained a lot of experience doing it that way.
It's definitely not like you killed it, man. It's definitely not knocking what you did. Also, here's another thing. You're local. So it's easy. Like again, for the average investor, especially for a newbie, if you can invest in your own city and the fundamentals are good, or if you have the home team advantage there, like you have contractors or you can do the work yourself, you should be doing it in your own city.
For sure. You should at least start there.
Yeah.
We always advocate.
You should start
if you can.
Yeah, because that's where you're going to get the experience.
So this is literally the question. Okay? This is literally the question.
All right.
So in Windsor, what can you buy right now in comparison to the GTA? Are you buying double the amount in Windsor?
Probably
is that what it, okay, so is it worth owning one in the GTA or is it worth owning two in Windsor?
Well, now
let's break that down.
But now it's too late though. That's my point.
Fair enough.
You would have had to be in the GTA 10 years ago, like in Hamilton or something, right when it was about to explode.
Talking about right now compared to Windsor to the GTA. What's the ratio? Are you buying
about
two
50%.
50%. So you're getting one more. So what's a better scenario? So does it make more sense for the first time buyer, investor, whatever, to wait a little bit longer to accumulate enough capital to buy one in his own backyard, gain the experience so he can be very hands-on? I always recommend people before they start fucking venturing out, if you can do it in your own backyard, it's the best option. Now, like what you're saying is there's nothing wrong with someone that's super hungry to want to go ahead and do it in...
Or you might not have the choice.
Yeah, or whatever, right? Or there's nothing wrong with somebody like literally leaving their own backyard and actually, you know, putting people in place in order to do it the right way and manage it the right way and you know, competent managers or whatever there are out there. FYI, Coachwood Capital. There are things out there that you can put in place to be able to do this. That's not what I'm saying. You, as an agent down here, you know, you're very knowledgeable about the market down here. So there's a lot of things, I'm buying shit in Miami. Like it's
2021.
Yeah.
You can invest anywhere.
Yeah, you can invest anywhere.
anywhere.
Now, would I be comfortable on my first one doing that without having a team in place?
Yeah.
Maybe not. But I was in a different market. Right, it wasn't a market where I couldn't get anything. Right now, you can. You tell me you can't even get anything right now.
It's a war zone.
Yeah, like you can't even get anything. Like I actually did a search for the areas that I'm buying in Miami right there. There's literally nothing. Like literally 2 months ago when I started this deal, there was like multiple 50 plus unit buildings out there. There's literally fucking not one.
Yeah,
like literally not fucking one right now. It blows my mind.
Yeah.
I can't even believe it.
So let's talk about that. So you're looking at 50 something condo units, right?
Well, hold on, listen. Let's talk about more let's talk about different strategies right now. So we just touched on the BRRRR, okay?
Yeah.
We just touched on BRRRR, how it's not necessarily going to make a lot of sense if you're in a GTA. Is that what we were talking about?
Well, we're talking about like what comes first, selecting your market or selecting your strategy.
Hold on, we're going to cut this right now. So, okay, we went on a rant there, number one. The next step is selecting the market.
That's my debate.
Listen, I like your suggestion is the proper one, okay? But in practicality, the problem that I have with that is sometimes it may not work, and it may put people in a very uncomfortable scenario that might cause them to shy away from making moves. That's the problem that I have with it. It's a very audacious move, buying shit outside of your own market, and a lot of people are very uncomfortable with it. That's why I'm saying if it makes you not afford if it doesn't allow you to get into the real estate market or whatever, then you should do whatever makes you comfortable getting in.
For sure. Again, if you can invest in your own backyard, do it. But I don't know, 80% of the calls I'm getting are from Vancouver and Toronto and GTA buyers because they can't buy there.
I get it. I get it.
But yes, if you're listening right now and you're in some sub-market, you should be starting out in your own market, and then you pick a strategy that works for your market and then go start there, right?
Yeah.
For the other people, I don't know. I guess I personally would pick my strategy or pick my market first, right?
Yeah, and listen, like I just said, I agree with you. I actually do agree with you that fundamentally that is the best move. But like I said, that may that might deter someone from actually doing something. So that's why I'm saying, like, if it's going to deter you from actually making a move, then save enough capital to do something in your own backyard if you can't afford it right now. That's all I'm saying.
Yeah, pick your market, and your own market automatically basically trumps any other market because of your the home field advantage. It's your home backyard.
Now what I'm saying, like what I do agree with you is if you can't do it in your own backyard, or if you're comfortable starting or doing whatever outside of your own backyard, fucking right, you should go wherever the fundamentals dictate is the best market.
Exactly.
100%. I totally agree. I for sure agree.
And as we're looking at the U.S., right? You start kind of broad, right? What are the fundamentals of the U.S. market? And I'm sitting here like, okay, frick, they have amazing beach, oceanfront property all on the coast. They have great weather down south. And then I zoom out a little bit further and I say, okay, well, there's a shortage of housing in the U.S., right?
Yeah.
So I'm taking a broad scope, and then I'm saying, okay, and then I zoom in. What are the trends in the U.S.? Okay, we talked about people leaving New York and going to Florida. We talked about people leaving California, going to Texas and Arizona. So then I'm going to zoom in a little bit further. I'm going to get a little bit more narrow, and then I'm going to identify those particular. Like the U.S. is big, man. It's 10 times the Canadian market in terms of population. So you have to be a little bit more careful, I think.
Yeah,
there's only so many cities in Canada.
It is a more volatile market down there.
It's hard to get burned in Canada because there's only like 20 or 30 cities, legit. In the U.S., there's like 500 major cities.
But it's really easy to pinpoint the ones that really work.
Agreed. It's not that hard.
Yeah, they also have like much more like robust analytics over there to depict like which cities are doing what. Like it's way easier. It's actually way easier to predict things and what's happening in the U.S. than it is in Canada.
Yeah, it's not that hard. Even, man, I tell people all the time, it's not that hard to see what's going on in the stock market. We overcomplicate things. Occam's razor, right?
Yeah.
Look at Netflix 10 years ago. You could see that they're about to everybody has Netflix. You could see Tesla. You could see Amazon. You can see these companies. You said that most people, They don't trust their own gut to see what's going on. We talk about the most basic of all, weather and beachfront.
Yeah.
Like, how much more do you need?
Yeah.
Okay, there's a good starting point. And then zoom into the fundamentals. Okay, what's going on in North Miami? What's going on in Austin, Texas? What's going on in this city? What's a market that's a little bit below the median price there that has that weather and those fundamentals? Who has a shortage of housing? Which cities? This is not that hard.
No.
Like, we could probably figure out some good cities within a week or two of just a little bit of research.
A week or two?
Yeah.
Like, fuck, we probably do it in 20 minutes.
Yeah. The same amount of time that it takes you to buy a single family home or a duplex, we could probably identify a hot market and then go dig deeper.
I could identify a market that I want to buy property in the U.S. faster than I can identify something that I want to buy in fucking Windsor.
Yeah, because it's,
like, I'm not even joking. Like,
for sure.
I don't, because I don't have to get up from my desk. It's easy to find the info.
Yeah.
You know, it actually is easier to find the analytics for something that I want to buy in the U.S.
And it's fundamentally driven, right?
Yeah.
Like, it's based on statistics, it's based on population, it's based on population growth and these other things, which is not that hard. The data's right there. U.S. has way more data than Canada.
It does, like, way more.
Try to find this stuff in Canada. Like,
way more. Like, in Canada, you're kind of relying on the government to produce the data.
Yeah.
And I don't like that. They're fucking way too slow. They're shit.
Yeah, you're
you know, who the fuck knows where it's coming from? And you know, that's why I like the U.S. for that matter too. So I would agree with you. Okay, fine, fuck, I submit. I agree. The right move is picking your market first, but you still, like, again, I still go back to the fact that if you can do it in your own market, you should do it. Number one, and number two, if it's going to prevent you from making moves, you should figure out a way how to do it in your own backyard to get started, or you need to get the fuck over the fear that's preventing you from going outside your market, going into these new markets. That's really what the right answer is.
And it's 2021, like we said. It's not that hard to do it.
Yeah, I always say this to people is, what would happen if a lot of people are like, hey, Dan, like, you know, I want to meet and we got to, you know, do this and we got to do that. So, like, we should set up a meeting. And I'm like, okay, listen, what if you were in, like, China and we had, like, a deal going on? You're not going to, like, fly here, right? Like, what if you're in, like, Australia? It takes, like, fucking 2 days to get here or whatever. You're not going to fly here. It's 2021. It's 2020, whatever.
Pandemic.
Yeah. We're going to make a fucking phone call. We could put this together on the fucking phone. Like, what are you doing?
Do whatever you want, right?
we could figure it out, right? You know, I even the property that I have in the US, like, I'm not there all the time. You put competent people in charge and things just work.
Yeah.
It just works. That's what you're paying for. You're paying for things to work.
Yeah,
when it doesn't, when it stops working, then you have to pivot. Then you fix the problem. Exactly. So I agree with you. I think that I
mean, why did you select North Miami? Right? Like, why did you
Miami Beach?
Yeah. Well, why though? Like, you looked at the market. Mm-hmm. I think you looked at the market first. Well, or did you identify the building first? Or
what did I do?
If that building was in North Dakota, I don't think you'd be interested in it.
Not as interested. So the fundamentals. I haven't
heard you talk about any North Dakota buildings.
No, I know, because there fucking aren't any. The fundamentals of that location and also that building are just very strong. Mm. It's like literally like 5 minutes. It's like a stone's throw away from, like, the nicest beaches in the world, really.
Think about that.
Yeah, exactly. It's in the neighborhood of, like, multi-million-dollar homes, which is, like, amazing. Like, I like to see that. It gives me a sense of reassurance that that pocket of real estate is insulated. Okay.
Always.
Yeah, for sure. So, you know, when you're buying property that's, like, you know, 131 a door, and I can throw a rock and hit, like, a $1.5 million house on the water, like, that's a fucking.
And think about this. People are paying a premium for property next to or close to the Detroit River.
Yeah.
Let alone the Atlantic and Pacific Ocean.
100%.
Like,
yeah,
on,
exactly.
Think about it.
Yeah. So there's all kinds of talk about, I not talk anymore, but, like, hedge funds are buying up property in the vicinity to set up their headquarters. Like, Bitcoin miners are going there. And the reason why they're going there is because there's like a migration of A lot of people from blue states going to red states and going to states where the weather's better, because you don't have to work in the office anymore. So they want more land, they want more space, they want cheaper pricing. So
no state taxes,
cheaper values. Yeah, exactly. There's no tax there. There's no state tax.
They're open right now.
Yeah, they're open. They're not shut down. Yeah. So you have strong you have strong economic factors in that state. There's limited water. Okay.
In the world.
So yeah, so let me paint a picture here. So it goes South Beach, then it goes Miami Beach, then it goes North Beach. And Miami Beach right now is like fucking exploding right now. North Beach, like I literally did this deal before there was like a ton of attention on North Beach. The attention was on Miami Beach. And I was like, fuck, obviously, if Miami Beach is exploding, South Beach already exploded like years ago. What do you think is going to happen to North Beach?
And how far is that?
I don't know, 10 minutes? Like not even. And it's the same fucking shit. It's like, it's not like you go from like shit beach or like great beach to like shit beach. It's all the same beach. Yeah. So I don't know. And not only that, like what I really love is when you could walk. You don't need a car. Mm-hmm. So you don't need a car, you live in this building. Okay, I love that, number one. That's a big thing for me. So all these fundamentals, it's working class area, which I really like because I feel even though it's in an area where it doesn't really necessarily, I don't see it being working class that much longer. So when they say working class in the US, they mean kind of like
blue
collar, a little bit, not rough, but like not,
it's not white collar.
It's not white collar. It's not A-class property. I don't like A-class property because when shit gets tough in the economy, people leave A-class, go to B, but people tend to not go from B to C.
That's a good point.
Okay, so people won't go that far. So B has the strongest. It's predominantly the strongest and most stable type of asset class. Mm-hmm. So the building's a B class, maybe even a B plus. It's in a great neighborhood. The forecast for the rents is increasing.
So you wouldn't take this building and put it in a city in a state like New York where people are the fundamentals are people are leaving this city in New York and are going to Florida. And that's the trend. I'm not gonna be interested in that building if those are the fundamentals of that city. I'm gonna say, no, I need that building in a different city.
For sure. So let's talk about the actual things that you and I look for when we're trying to scout property. Now, it's not like you're not gonna hit all of these, okay? This is not something that you're gonna hit all of, okay? So I look for a decreasing vacancy rate in the area, okay, in the submarket. I look for an increasing population rate, okay, or forecasted population rate or historical increasing population. I look for specific demographics where the median household income is on mark or higher than the typical like US or whatever area or whatever country's median household income is. So say, for example, the US is at like, say, 70,000. I'm choosing submarkets where the median household income is 70 or above, okay? Mm-hmm. I'm also choosing like, if the average population increases X amount, I actually just really care if the population is increasing. I don't care what the other population areas or whatever other submarkets are doing. I want to know that I'm investing in an area where the population is growing, okay? I also want to know that the vacancy rate's coming down, okay, for that number one asset class and also that submarket, okay? A couple other things. I want to see the median household home price is lower than the median home value in the entire United States. Because what I like about that is that means that submarket or market has room to still increase.
Yeah, and it's a margin of safety as well.
Exactly. Yeah. Especially if you can find that, especially where areas we're talking about, fucking 5 minutes from a beach, it's in Miami, all of the, like, the
people leaving New York.
Yeah, like that alone. If you can get on a bike or like and be on a beach in 20 minutes, so it's a 20-minute bike ride or 5-minute car ride, that's huge, man. That is like literally massive. Huge. Where there's shops, like all kinds of shit. That's huge. That's all almost I even need to know, right?
If you were living in New York right now and it was the middle of March and your job is now work from home, what's the first thing you think you would start to think about?
Fucking getting out of there.
Yeah, I would be like in my mind, I'd be like, I should go to Florida. I can do this job.
Can't even do anything there.
Like, why would I stay? It doesn't make any sense.
For sure.
People are overcomplicating real estate.
For sure.
This is not complicated.
No, for sure. It's where people want to live. It's simple as that.
Yeah, it's where you would want to live.
Exactly.
Where I would want to live.
That's where I want a vacation. So fucking buy real estate there. So, so those are kind of like the drivers that I look for. I also look for something very interesting here too. I like to look for the 12-month absorption rate being higher than the 12-month. I can't remember exactly what the term is. What's the term here? The 12-month. Like onboarding, not onboarding, but the 12-month new supply rate. I can't remember exactly what that's called.
Something.
So I like to make sure that the 12-month absorption rate, which is like in 12 months in that submarket, X amount of units have been absorbed or essentially rented.
And then units have been
new units coming on board. Right onto market is lower than the absorption rate, whether that be new construction and or just new product coming onto market, whether it's a renovation or whatever, right? Yeah. So I like to look at that stuff.
Is this complicated? Growing population,
no,
low vacancy, more demand than supply, long-term, some subjective fundamentals of what's going on in the market in general. Yeah. And we could apply to that, for the U.S. specifically, also a broader scale of the new immigration policy coming in the U.S. and then possibly raising the minimum wage to $15.
Yeah,
when the minimum wage in Florida is like, I don't know, 7 or 8. Is it one of those states where it's like $7 or $8 an hour or something?
Let's see what the minimum wage is in Florida. Minimum wage in Florida is effective January 1st, 2021. Florida's minimum wage will increase from $8.56 per hour to $8.65 per hour.
Could you imagine?
Yeah, if they increase it to 15, which is what they're trying to say.
That's the federal.
Yeah. If they do that, real estate values are going to fucking skyrocket. So another market that I look for as well, and this I feel, this is what I'm going to bet on this because I'm going to bet on this.
Okay.
I want to also see markets where this is why it doesn't matter all that much. We have an aging population. Okay. The baby boomers are getting older, it is significantly aging. I like senior community properties.
Okay. Gotcha.
That's what I really like. So I own a lot of senior community property, and the fucking tenant base there is outrageously stable.
Yeah.
Like outrageous. Sure. You don't get market rent. Number one, for a couple of reasons. Number one, they typically stay there for a long fucking time. Like it's harsh for me to say, but they literally don't leave until they die, or they have to go into a home or assisted living or something like that. So, and they don't cause shit. There's no fucking problems, like nothing crazy. They don't have fucking parties all over the place or trash in the fucking place. They respect the place. They take pride. There's like a sense of pride of pride of ownership, not necessarily pride of ownership, but pride of like living. Yeah, I'll give you an example. So Canton Manor there that I own. I've never ever in my life, never. Now I haven't frequented like very high-end A-class properties because for reasons that I previously discussed, I'm not really like all that interested in them. I've never been into like a B-class property ever. I've never toured one. I've never owned one where people literally had planterns outside of their, like I'm talking about like, how people put at like a nice house, there's fucking planterns at the side of their door, the front door. These people had fucking planterns outside of their door, not just like one. There was like multiple units with shit like that. They had a community on each floor, a community reading area where people would like donate. Yeah, they would donate books and reading material. Are you fucking kidding me? Name me a property where that shit wouldn't be stolen.
Yeah.
So that's what I'm saying. As soon as I walked into that property, I was like, this is something special. And people wouldn't realize that because I've toured enough properties to know that fucking property, that's special. You don't see that shit. And that is why I like that property too. So I love community, senior living, even if the market fundamentals don't exist as much as other areas. Because the senior community is increasing in population dramatically.
You can invest in real estate anywhere.
Yeah.
And you can adopt a different strategy. That senior community plan or whatever, investment strategy is a different type of strategy. But you're going to get a stable product, but you're probably going to forego some. It's not going to appreciate like North Miami, right? So there's going to be a trade-off.
For sure.
And that's fine. There is no one way to do real estate.
Yeah.
But it's just like me buying a dividend stock. I know TD Bank's not going to freaking triple in the next 3 years. I think Amazon will. It's a different bet.
For sure.
And I'm going to build a portfolio of a bunch of different properties.
For sure.
I'm going to buy some fast appreciating
and that's,
stuff.
Yeah, and that's why I wanted to, we're talking about like picking markets based off of like these literal, like these metrics, right? I wanted to bring in something else for people to understand why I would actually veer off from those fundamentals. If I could build a property of only senior communities, I would. Like that's how much I like it.
Yeah, I gotcha.
Like I really would. Like they're awesome. But
yeah, and what if you did that in where do most seniors go to retire?
Of course, yeah. But I'm going to tell you the problem is like those properties actually do go for a premium.
For sure.
Which is kind of like against. They go for super low cap rate. You got to understand, like the same thing like a blue chip stock.
Well,
right?
what
Like,
if you identified the next market where these seniors are going because they're getting priced out of Florida, and maybe they're going to South Carolina, or maybe they're going
for sure,
like
of course, yeah.
So then you hit the senior community in the market that's about to burgeon.
For sure.
I don't think that's that hard to do if you dive in and do a little bit of research, right?
If you actually apply these metrics to those same markets, it would work.
Yeah.
Fact of the matter is like if you're looking for real estate and something pops up on the market,
and
it's a good deal,
for sure.
You got to fucking do it.
Yeah, for sure.
That's what I'm saying, right?
And
because there's a population of aging, baby boomers or whatever that it's rampant. They like the kind of community. They don't want fucking Johnny over there having a house party at fucking 2 a.m. They don't like that shit. Or Johnny fucking smoking weed all day.
They want
they don't like that.
Yeah, and the building you bought is 55 plus, right?
It's 55
People
plus.
People are going to be attracted to that
for sure.
Yeah,
super stable. Oh fuck, it's a
and you're building a portfolio. You're not buying only one.
No,
property,
exactly.
Right?
And I like that. Right, like taking a little bit more of like the depreciation approach and the market rent, increasing market rent, all that stuff, getting into markets that are, I'm anticipating are going to explode, yada, yada, and also pairing it with the senior community. I say that I would only have senior community, but the fact of the matter is there's actually not that many buildings that actually offer the in-between. So a lot of times you either have like, market buildings, market rent buildings, or you have like assisted living. It's not that common to see like a senior community where it's 55 or X amount plus, like those, it's not like that common. Do you get what I'm trying to say?
Yeah.
So that's why I was like, if I could find them all the time, I would love that. But it's hard to actually find those. And then because it actually takes a long time to convert. Like these buildings were slowly weeding out people below 55, right? You do have some scenarios where there's bylaws where specific buildings actually were built for that specific reason. But a lot of people don't build those buildings because you typically don't get market rent. And when you don't get market rent, the value of them doesn't increase, right? As high. So when you have a developer building these buildings and he wants to hold it for 3 years and then flip it, he's going to get more money building A-class market rent buildings. That's the reason. So a lot of people there's really not that much supply on these properties because nobody really wants to build them.
It's too slow for
It's
some
too
people.
slow. It's not enough.
Relatively.
Yeah, it's not enough profit margin. But when they come up, what I've seen is they typically go for lower cap rates because they're so fucking stable.
Yeah, you get a
You know what I'm
trade-off,
saying? Yeah, there's a trade-off.
Lower risk, lower reward.
Exactly.
Same
So
as anything
what
else.
I did in Canton was I found a building that was of this type of demographic that like rarely had a rent increase. So there's room to increase rents to market to 55 plus senior community market rents to get them to market there. They're not even at market for the senior community right now. So that's what I liked about that building.
100%.
You know what I mean? It's going to be a slow process, but what's going to happen with that project is it's going to slowly increase in value and slowly increase in cash flow. Based off the increasing rents and based off the increasing rents will increase the value eventually. But at the sale price, that fucking building is going to explode in value.
Yeah. And we're talking in generalizations, right? If I say I don't like Calgary's market fundamental. I don't know that much about Calgary, but from what I know, I don't like them that much because I don't know a bunch of people. We lived it, right? People were leaving Windsor and going to Calgary during the oil boom. That shift has changed. So let's just say I don't like the Calgary's market. It doesn't mean there's no deals in Calgary. I would never buy anything.
Yeah.
You would just have to like be smarter. Okay, well, maybe the agent community in Calgary is increasing and this particular building's a great deal. That's not what we're saying.
Yeah.
But like in general, you're going to start with the market. But if you wanted to take a specific strategy to a market, then you'd have to just, I don't know, you could take the senior community strategy and say, I guess start from that building and then build out from there, right? Like it's like you identified that building first, and then zoomed out, right?
The
numbers were good.
I like the market first. Like I am actually familiar with like we're obviously so close to Michigan. I'm actually familiar with Canton. It's like a pocket of like really good real estate. So
it's like B plus.
Yeah. So I bought this fucking building for like I don't even know what 59 or 60 something like $59,000 or $60,000 a door when. Like literally it backs onto homes that are like $300,000 on average. Like that's what I'm talking about. Like the median home value there is significant. And also the median household income is fucking significant. So what do you think is going to happen when all these fucking baby boomers are like, fuck it, I don't want a house anymore. I just want to rent. I want to take the equity out of my house, travel, do whatever. Where do you think they're going to go? They're going to go there.
Community,
Exactly, right? And it's a nice fucking area. It's very nice.
And I think
you can walk to places.
And
this is what I'm talking about.
55 below market rents. Like they were all below market.
Oh, yeah,
rents,
way below,
well.
for sure, yeah.
You can do both. You can
for sure.
identify a building first, or you can identify the market first and then go find a building within the market. They both work.
I think they both work. I think that identifying what I have found is identifying the building first and then the submarket analytics around there typically is faster. So I zero in on the property a little bit quicker. That's not to say that that's the wrong approach. I do like looking at submarkets and understanding the submarket a little bit quicker too. But what I like to do too is I do like to zero in on a property first. If the property meets like very quick, if the property's, got a decent vacancy rate, if the property's got a decent cap on it, if it's making money, if it's, I don't even know what else, if the unit price is like, lower than like the national median average or the median home value or whatever, then I'll take a look at it and then I draw my circle a little bit out from, or the radius. I like to take a look at the submarket. So it kind of happens a little bit quicker versus like multiple times I've like zeroed in on submarkets and there's just nothing there. Yeah. You know what I mean? So I like to that's why I like to sometimes look for a property if it fits my criteria. It's over 50 doors, it's 100 doors. Like the unit value is lower than the median national value. Like, it's easier to zoom in on these properties because now you've got like 20 properties that you can do a very quick analysis on. And then if that submarket doesn't work and there's other properties in that submarket, then you all of a sudden just, crossed off 5 properties. It's easier to zero in. That's how I did it with.
I see.
That's how I did it with a few properties. Now I'm not saying that that's the right answer. That's what works for me, and that's quicker.
Yeah. So if we had to sum this up, what's the answer?
I think you have to look for the right answer, like literally the right answer on the next step.
Yeah. Let's get your take on it. I'll give you my take, and we'll just leave it at that.
Yeah.
Like, there is no one answer, I guess.
Yeah.
But.
So I'm going to give I'll give everybody a couple metrics on what I feel is the best approach to take. So number 1. I want to look for markets and submarkets that are increasing in population. Number 2, I want to look for markets and submarkets that
so we already talked about it. Let's debate.
What do you mean?
What would you rather do? Pick the market first or the building?
Strategy first. I would rather pick the market.
Okay.
The whole argument with you and I before was a newbie. We're not newbies. You know what I mean? Like I'm obviously fucking comfortable going outside my backyard. I've only been like Miami is like, I don't live there. You know what I mean? And the fundamentals work there.
Yeah.
But what I was saying is like, if it's going to prevent you from making a move, then you have to do whatever is going to allow you to make the move. And if there's too much like hesitation and anxiety or whatever about doing it outside your backyard, then hold off until you have enough capital to fucking do it in your own backyard, or get the fuck over your fear. You'll never get over, here's the thing too though, you'll never get over your fear. You just need to fucking harness it and realize like you will never get over your fear, no matter if you invest in your own backyard or if you invest outside of it. You'll never get over it. So you have to fucking realize that and then figure out how to make the move.
Just got to make moves, yeah.
That's it. And then the more times you make those moves, the more comfortable it'll get. Yeah. The fear will never go away. It's never gone away from me. I'm still like fucking scared shitless every time I do anything like this because it's a big deal. I just realized that like I've gotten comfortable with being uncomfortable. You know what I mean?
Yeah. And then to sum up, I guess my point, which I think we're on the same page.
We are.
But
yeah.
I
you
think
fucking convinced me.
You can't you can select a building and freaking knock it out of the park in any market.
Yeah.
I am not ruling that out. I think there's a way where you can select the market that's about to explode, or is it in the early stages of an explosion, and accelerate whatever. You can get gains anywhere in real estate, but if you pick the right market, you're going to get like double, triple the gains like in half the time.
For sure.
If you are right.
Now, how do you now? What metrics do you need in order to predict that?
So
those were the markets that we were talking about, right?
Not rocket science, but there's also a subjective part of it.
For sure.
You have to be. The statistics are always lagging. They're always lagging. I'm going to see something before it shows up in the statistics a lot of times, right? Like with Tesla 10 years ago, I was like, this is the future. Like I can see it. I can feel it. I know it. I would go on a forum and see people talking. I love this freaking car. They're obsessed with it. And so if I made that bet 10 years ago, it took a long time to play out, but the statistics didn't show up, right? They only sold 10,000 cars the first year. So you have to have a subjective skill set to be able and to trust in yourself, right? Like, and then let the fundamentals play out over a long time.
Yeah.
Nothing happens overnight. So
for sure.
I guess that kind of wraps it up.
I would say, from my perspective, I would say if you're comfortable going outside your backyard, and if you're a seasoned investor, picking your market first is the best move. If you're not a seasoned investor and you just can't get over the fact of you're too scared or there's too many things preventing you from going outside your backyard, then maybe it's best where you hold off, raise enough capital to do something in your backyard. Then once you become comfortable doing what you want to do in your own backyard, then it's okay to start getting outside of your comfort zone and going outside of your area there.
Yeah, and if you're going to pick your strategy first, then you have to pick a market that suits your strategy.
Exactly. Yeah.
Boom.
Done.